Welcome back to our live video trading series. Today we are talking about the cryptocurrency market free fall and when will it hit rock bottom. You know, rock climbers have a term for when you fall. If you don't arrest your fall yourself and your rope doesn't arrest your fall and you fall all the way to the ground, that's called cratering. So, there are a lot of people who think that the cryptocurrency market is cratering. And let's put that in perspective and talk about what's happening in the cryptocurrency market and when will it hit rock bottom and what is going to happen between now and then. This is a chart going back to last June, last May, and it's a Bitcoin pops and drops. It's all the rises and falls in the Bitcoin market, and Bitcoin as a proxy for the cryptocurrency market in general. Since then, all the way up to today, February 6th, 2018. So as you can see, pretty much every time Bitcoin has made a significant drop, that has been followed by a significant pop in the price. So each one of these times the price has dropped, it has subsequently recovered rather quickly. So let's look at what that looks like in a spreadsheet because it's very instructive. You can see here that the falls, the drops are in red, and the pops, that is when the price recovers, is in green. And going back to May 25th, 2017, all the way up to today, you can see that the recoveries have been pretty dramatic and strong. So it's been very resilient, an incredibly resilient market. Look at these recoveries: 68% recovery after a 35% drop, 86% recovery after a 19% drop, 67% recovery after a 15% drop, and 108% recovery after a 30% drop, 129% recovery after a 25% drop. So those are pretty dramatic recoveries, and what's important to notice about this is the length of how long it took to recover. There's a saying that Bitcoin takes the stairs up and the elevator down, and you can see that in some of these chart formations where it gradually rises, the price gradually rises, and then kaboom, just falls, 30%, just like that in about 3 days. So here it took about 1, 2, 3, 4, 5, 6, 7, 8, 9 days to go up, and 1, 2, 3, 4 days to drop. So it drops pretty quickly, and you can see that the recoveries have been pretty quick too. So one of the concerns about what's going on now and how the current pattern looks different is there are really two concerns about it. Okay, the first one is it's been a long, slow, painful drop in the market. And I don't have to tell you that. You're well aware of that. This has gone on for 32 days. The last 32 days, Bitcoin has dropped 66% in price. Now, if you count going from the high of almost 20,000 on Saturday, December 16th, that you adding 20 days, so that's 52 days. That's almost 7 weeks of the market just gradually and painfully and slowly descending. So that's what we're looking at from here. This is back from the high all the way down to the lows. And believe it or not, the low of today was 58.73. So Bitcoin was below 6,000 today. And that's kind of hard to believe, but we never thought we'd see 6,000 again, and here we are. So it's above 7,000 now. So it's recovered somewhat. But that long, slow drop is concerning because that is the longest time the market has taken to drop in this entire time frame. 32 days is by far the longest one. Prior to that, the longest one was 22 days here back in July of last year, 22 days in August of last year, 21 days in September of last year. But most of the drops have been very quick. Look at these: 5 days, 4 days, 4 days, 1 day, 3 days, 6 days. Okay, so most drops have been very quick and dramatic, and this one is not behaving that way. So that's a concern. The other concern here is that after the initial drop from its high, okay, it had a pretty good recovery and it popped up 65% between December 22nd and January 5th. But it did not reach a new high. It did not put in a higher high. You see how this high of December 16th dropped down to a low on December 22nd, and then the subsequent pop to January 5th was not a higher high. It only reached as high as 17,200 or so. So that is a concern. That chart pattern may indicate a change in the trend and that the trend is now heading downward. It may indicate a change in the trend and that the trend is now heading sideways. And it also could possibly be an indication that the trend is going to resume after a significant retracement. So there's no way of knowing exactly what that means, but just looking at the chart pattern and how it differs from the previous drops and recoveries that we see on the Bitcoin chart is something to consider when you're looking at the market as a whole. Now, these numbers, are pretty amazing, and the recovery, when you look at the numbers and you see the recoveries, you'll see that 65% recovery, 129% recovery, 67% recovery. They're pretty dramatic. So a recovery from this point would be expected to be equally dramatic. Also, to put things in perspective a little bit, looking at the market in general, these are ranked by market capitalization. And you can see I have here all the time frames: 24 hours, 7 days, 30 days, 90 days, and 200 days. Okay, so if you here, let's just sort it by market capitalization. Okay, so if you look at Bitcoin, Ethereum, Ripple, Bitcoin Cash, Cardano, Litecoin, the big players, you can see 7 days and 30 days, pretty much a bloodbath. Okay, down Bitcoin down 51%, Ripple down 78%, Cardano down 69%, NEM down 69%, this Tron down 83%. So these are pretty devastating, carnage here in the cryptocurrency market in general. But if you look at it with a little bit of a longer-term perspective, that is the 90-day and especially the 200-day time frame, you can see that almost all of the major players are in the green, and some of them pretty respectfully in the green. Okay, Bitcoin 207% gain over 200 days, Ethereum 247% gain over 200 days. Let's see, Dash 158% gain over 200 days. So those are pretty respectable gains over the past 200 days. So, just adjust your time frame a little bit and you can get an idea of how the cryptocurrency markets are, obviously bloodbath, carnage right now in a free fall, but over a longer term horizon, not so bad. Now, people are always trying to write Bitcoin's obituary, and that's It's funny. It's laughable, especially, again, looking at uh, the story in perspective. I'll give you a quote here, and then I won't tell you where it came from. It says here, this is, I'll give you a quote here. There's the Grim Reaper and Bitcoin uh, at the moon, going to the moon, and it says Bitcoin's path to the grave has always been fairly clear to me. You can't seize a Bitcoin like you can seize a dollar, since it's simply an alphanumeric string. And that is a quote from a New York Magazine article written on June 20th, 2013, by Kevin Roos, called Bitcoin Sees the Grim Reaper, and Bitcoin was trading at $105.70 on that day. So the interesting thing about this is that it's amazing to me that a journalist from New York Magazine can write an article knowing so little about what they're writing about. In this case, uh, he says Bitcoin is simply an alphanumeric string. No, it's not. No, it's not. It's actually what it is a extremely valuable chain of linked transactions that are woven together on a blockchain that establish something that we've never ever seen before, and that is verifiable, mathematically verifiable ownership of digital assets, mathematically created digital scarcity that is nearly impossible to corrupt, and finally, a utility value that emerges from the fact that this is the first time a currency and a payment system have been united into a single system, so that the value of Bitcoin is not bound up with the Bitcoin itself, or the value of any cryptocurrency is not bound up with the value of the coin itself only. That is the use cases and the adoption. Most people, when they consider the utility of a cryptocurrency, they only consider the use cases and adoption. That is, can it be used to buy your coffee at Starbucks? Can it be used to transfer money to the Netherlands? And a cryptocurrency is much more than that. It provides verifiable ownership of digital assets. Two, it provides digital scarcity, and most importantly, it provides utility value in that the currency is the payment system, or put another way, the medium is the method. And think about it, a $100 bill is the currency, while the transfer method, that is the payment system, is something completely different. That's the wire transfer, the credit card, the bank, the movement of cash from one physical location to another, however that those funds are transferred. That's the payment system. Okay? Cryptocurrency is not that. Cryptocurrency doesn't actually exist. You cannot have a stack of bitcoins. You cannot have a safe full of bitcoins. You can't hold them in your hand or keep them in your pocket. What they are, that's because they don't exist. What they are is a chain of linked transactions, cryptographically linked transactions woven through a blockchain, which represents the ownership of those assets. And that blockchain is virtually incorruptible. So that ownership of those assets can be established and verified on the payment system, and the currency itself is the payment system. So the value, I wish this reporter had gone back to Econ 101, because in order to establish value, you only need to check two boxes: scarcity and utility. And cryptocurrencies establish digital scarcity, and that each chain of transactions woven through the blockchain is unique. There's only one of them. And when I mean there's only one of them, I don't mean they can't be copied. But when you copy a cryptocurrency, you don't have another cryptocurrency. You have the same cryptocurrency. And that's because millions of copies of that cryptocurrency are distributed throughout the blockchain all over the world. And the end of that chain of ownership of transactions is assigned to a single person with a single private key. And that person, only that person knows who they are, and that person using that private key is the only one who can establish ownership of that chain of transactions. So when you talk about scarcity, you can take a $100 bill and you can make more $100 bills. You can make one more, two more, 10 more, a million more, and you'll have a million $100 bills. But with a cryptocurrency, if you take a cryptocurrency, which is the actual transaction chain, so the currency is the medium of exchange, and the system of it is the currency and the system of transfer. If you take that and copy it, you don't have two cryptocurrencies. You have the same cryptocurrency. And that's the difference between a digital asset and a real world or physical asset. So, all those people who are continuously trying to write Bitcoin's obituary, Bitcoin cryptocurrencies are not dead. The Grim Reaper has come before, and we've seen the Grim Reaper many, many times. And this is simply a case of when you look at the recoveries, you can see that every time Bitcoin has dropped, it's come back stronger than before, with the exception of this last time. And like I said, that is a concern, something to watch in this market. But still, this major uptrend could still be intact. And just one more demonstration to possibly give you a little bit of a better feeling about where we're at with the cryptocurrency markets. If you look back a year in cryptocurrency, what you'll see is that into each of the top 94 coins last January, that is a year ago, January, okay, January 2017, if you had invested $100 into each coin, that's for a total of $9,400 investment. Okay, less than $10,000 invested 1 year ago. This is the number, this right here in the center of the screen, if you can believe it, is the number that you would have today. $2,566,286.15. Okay, I'm not get that extra 15 cents in there. So $2.5 million if you had invested $100 in each of the major cryptocurrencies 1 year ago. So keep your time frame in perspective. Follow the market and its rebounds closely, and keep an eye on the fundamentals as well, always keeping in mind that when people say that Bitcoin has no value, or that a cryptocurrency has no intrinsic value, which is something you see a lot in the popular press, don't forget Econ 101. Cryptocurrency establishes digital ownership and digital scarcity and utility value by providing a brand new technology we've never had before, which unites a currency and a payment system. So the currency is the payment system, the medium is the method. Hopefully this video has given you some powerful and useful information that you can put to use to make better, more informed, more research-based cryptocurrency investment decisions. Ciao for now.